I'm going to talk about the best investing tips for all investors. Welcome everyone to Don't Fear Finance. I think we should have a simple but important video today. We have been doing a lot of talking about real estate, finding values of stocks, but today I think we should talk about tips for investing in any investment. This video will be quite similar to other videos on my channel, but instead of investing advice, I'm going to be talking about the best things you should be doing while you're investing in stocks, homes, commodities, pretty much every investment, as well as what type of investing you're going to be doing based on what type of person you are. Take notes if you're indecisive or impatient or very patient and is someone who knows that they can wait to get what they want. This video will let you know what you want to do within your investments depending on what type of person you are and how you act and think. I will also give you tips on what you should do with all of your investments, no matter the type of investor you are. If you don't know what type of investor you are, then listen carefully because this video will help you find out. Before we get into the video, make sure to like and subscribe, comment down below telling me that you did, as well as hit that bell icon for notifications every time I upload. Now, into the video. There are many types of people, which means that there are many types of investors. I say this because my first tip is showing what type of investments are the best for each type of extreme investor and personality. The first type of investor is someone who doesn't like to wait and doesn't want to sit around for 30 years to have major profits. They are impatient and are ready to see profits now. They most likely want a flow of good sums of money coming in, making them richer and richer every single day. If you're someone like this, then some investments that are best for you are things that could give you smaller returns like checking account rewards, credit card churning, and treasury deposits. These investments are small, short-term bursts of money. Whenever you open an account or you open a credit card like this, you get a reward after paying a certain amount of money with the bank on that card. So this means that you're getting money from spending money. This should only be used on credit cards or within an account you are already planning to open or spend things on. I'm guessing that you're someone who wants larger returns. So here we go. First, there are corporation bonds. Before I continue with this point, I want to point out that I have made an error. I have been saying that bonds are the safest option, which in some cases are true. But to be frank, they are safer when they are given out by the government and riskier when they are given out by corporations. The bonds given out by governments are also known as treasury bonds, are longer lasting and have lower returns, whereas the bonds given out by corporations are short-term bonds and have higher returns, about an average of 3% per year. I just wanted to clear that up for future reference. Corporation bonds are better for short-term profits because you can hold these bonds for 1 to 2 years and get up to a 3% return rate per year. These are good for short-term investing. Next, there is any type of ETF. ETFs are funds that you can buy that hold whatever you want to buy, be it an index fund, bonds, or industry-specific investments. These are able to be traded throughout the trading day, which makes them safe and lets you have short-term profits within weeks or even days if you play it smart. If you have a large gain one day, week, or month, then you could sell it for major profits. Then there is a riskier investment, which is peer-to-peer lending. This is where you give money to new small companies and you get a large return on your money through interest rates when the company starts making good and consistent revenue. This is also known as angel investing. If you want me to go into this, then comment down below. Although we get very good returns on a lot of these investments, they are riskier than their longer lasting counterparts. The thing with investments is that they gain value just as quickly as they lose it if you're playing dumb with them. If you're someone who likes to wait, then you could be fine with investing in long-term investments. Long-term investors are perfectly fine waiting a long period of time to get a good, safe return on your money. This would generally make them patient and willing to wait things out to make good decisions or buy and sell in the markets. If you're someone who is willing to get rich slowly, then investing long-term could be your cup of tea, although you're going to have to live like the middle class. By this, I mean living like you're making $50,000 to $60,000 per year, when in reality, you're making up to $1 million per year through investments, but they're just not liquid and you're not able to spend it. There are many examples of long-term investments that I've mentioned a lot in my past videos. The first thing is bonds. Not the corporate bonds like I mentioned a few minutes ago, but treasury bonds which are distributed by the government. Treasury bonds have a 2.5% return rate each year, which doesn't seem like a lot less, but when you have large sums of money in an investment, then it seems like you're not getting as much back. Although you're getting lower returns than corporate bonds, they are much safer and better for long-lasting investments. This is because the government will always be able to pay you back. This investment is not going to have extreme returns like Tesla or fast-growing companies. Bonds have plateaued returns or very slow gaining returns because the government is only getting so much back from their constituents in taxes. Next, we have mutual funds. A mutual fund has the best investing instruments put in by a manager to help you grow your wealth value in the markets. You can use this to gain profits in many different investments. This gives you diversification within your investments for safety and constant profits. The next investment is something that I brought up a few times on this channel, which is blue chip stocks, blue chip industries. These are stocks of companies who are worth billions of dollars, giving safety and constant profits to their investors, just like mutual funds, but not as diverse. This makes them riskier than mutual funds and index funds, but are safer than a lot of companies in the markets. Blue chip companies include investments like real estate companies, finance companies such as banks, and other very safe companies in the markets. From the outside looking in, this investment doesn't seem too profitable, but it is. They are commodities, things such as art and gold. These are good for short-term gain as they grow in value faster than many investments in the stock market and in real estate. To get the best returns out of this investment though, holding these commodities for long-term gain will make you so much more money and value. It's way better to hold these for long-term gains and think of this as a long-term investment. Something I didn't want to mention in the previous portions of this video was real estate. Although this is a good long-term investment, it is something that should have its own category. This is something that I feel that both short-term and long-term investors should invest in. It gives short-term investors rent money and long-term investments equity in the home. This investment makes both investors happy. Now we're on to part 2 of this video where I give some all-around investing advice for all investors, whether it's in the market, real estate, or bonds. These aren't going to give you millions of dollars overnight in returns. They are going to be tips of which give you safer returns in both long-term and short-term investments. Just in general, the best tips overall for investing. If you want to see a video where I speak about the best tips for other investments or just the stock market, then comment down below and subscribe, so then I know that you want it. The first tip is to buy low and sell high. This is pretty obvious from the name what you have to do, but here's an in-depth description. When the markets or certain industry have low prices that are predicted to have a rise in price, you should buy into that industry because when the prices do rise, you could sell it for major profits. This could be anything from buying a property that's worth $300,000 at $150,000 and selling it for $450,000 to buying a share of a company that went through troubling time in the past year but is always predicted to go back up. This could be better for short-term investors, but both should look out for this. You should only use this rule and tip if you see a dip in price. Don't wait for these dips though, because you could be waiting for a very long time. Just buy often, no matter what the markets look like, no matter what type of investor you are. The second tip is to invest in securities and properties. First off the bat, what is a security? They are tradable tools that can be used in both private and public markets to increase capital. Using these will increase the chances that you will make a lot of profits from investing in the stock market. The next part of this tip is properties. I mentioned that investing in properties are something that both short-term investors and long-term investors should do. I feel that every investor should have at least one property to increase their net worth. Owning a property gains you at least $100,000 in value if you hold these properties for a few decades. Now, holding these properties for a few decades isn't really a short-term investor's cup of tea, but you can still, like I mentioned, rent it out or flip the home by just putting more money into the house. The third and final tip is to take higher risk when you're young. Again, this doesn't mean stupid investments when you're buying young, but rather well thought out, higher risk investments that you would not make in your later years. This is smarter to do now because you most likely won't have dependents you have to take care of. Over time, these investments will most likely gain more safety in their income and value. You have a lot more leeway to mess up and lose money now compared to when you're older. So take advantage and stop worrying about a lot of losses because you can always make that money back in the future. That's the video. This is a much more compact video than I thought it would be when I started writing the script. I couldn't leave out any of these aspects and details. I hope you guys enjoyed. If you guys did, make sure to like and subscribe, and I'll see you in the next video. See ya!